Hello and greetings everyone. I hope everybody's having a fantastic day today. In this video today, we're going to discuss MicroStrategy and how they have been pioneers in being the first publicly traded company that has been holding Bitcoin in their treasury. In this video today, we're going to answer the questions: where did they buy these Bitcoins and how did they go about buying it? These are very important questions I believe many of us are curious about, and this is the video for that. Let's get right into it. Like we said, MicroStrategy has made us very successful bet to produce over 300% gain for its investors. And looking at the high points of this article, MicroStrategy stock actually soared 337% in 2023. It actually outpaced most of other US companies that have a market cap of 5 billion and above. The growth has been fueled by the company's Bitcoin holding, obviously, which it started accumulating back in 2020. The vast majority of MicroStrategy's value, of course, hence comes from Bitcoin, although it really has a very successful software business as well. This is the founder, Michael Saylor. He's a real Bitcoin maxi. So he went all in on Bitcoin. The company itself has been founded almost 35 years ago and existed most of its history as a little-known software company, focusing on business intelligence. In 2023, its stock, like we said, soared 337%, making it now one of the biggest gainers amongst US companies. It actually outpaced Nvidia and Meta, formerly known as Facebook. So unlike its peers, which rely on revenue growth and market share gains, MicroStrategy's investment strategy is exclusively due to Bitcoin. And like we said, they started purchasing Bitcoin in mid-2020, and since then, it roughly amassed 174,000 Bitcoins, which were back then worth roughly 7.6 billion. They purchased actually more 2 days ago at a price of 615 million. So they still keep accumulating. They're sitting now at around 180, close to 190,000 Bitcoin. So they're one of the heavyweights. And even here, as we see in the list of who owns the most Bitcoin in 2023, it's clear to see that this article needs update. They have way more than what they have now. They have roughly more than 35,000 more in their balance sheet right now than it's showing here. So Wall Street was amazed that this stock actually doubled Bitcoin's gains this year. And I know, very interesting also to understand the reason why they decided to buy Bitcoin. It was because it represents a form of digital gold, Saylor said, and also it helps the investors to have a stake in Bitcoin rather than having to buy Bitcoin directly. He went further on to say that 99.9% of capital in the world are invested either in real estate, stocks, bonds, and commodities, with only 0.1% allocated to Bitcoin. Michael Saylor, hence, is seen as a visionary. He saw this as an opportunity to really exploit the fact that they had a lot of cash and pristine balance sheet, so they started accumulating Bitcoin for their treasury. They look at it as an experiment. It was a successful experiment indeed. And now this gets us to the questions of the video of today. Where are they purchasing the Bitcoin and how are they purchasing it? While ETFs are passively managed, MicroStrategy has the option to put Bitcoin holdings to work, using them, for example, as collateral to create more business opportunities. And when asked why the stock surged so high, it's actually because the scarcity premium. What does that mean? They being the visionaries and pioneers in their industry, being the first ones to hold Bitcoin on their balance sheet, gives them that scarcity premium. They are the place to go to for institutions that want to gain exposure into Bitcoin indirectly. They can do that by purchasing MicroStrategy stock. With that said, let's go to where do they purchase their Bitcoin. MicroStrategy used Coinbase brokerage. In 2020, they purchased $425 million worth of Bitcoin. Now, the way these large institutions operate is they don't purchase Bitcoin like regular retail on exchanges. The reason being is because Bitcoin is extremely illiquid. There is only 900 million in the liquidity pool right now. And as we see in this article, their latest purchase was for 615 million. So as you see, it would have really flipped the market. So they don't use centralized exchanges to purchase their Bitcoins. This is how they went about purchasing it. Michael Saylor hired Brian Armstrong, who is the CEO of Coinbase, to help it buy large quantities of BTC, of Bitcoin, without moving the market, so over the counter. And because Coinbase has an over-the-counter brokerage service, this is how MicroStrategy has been purchasing their Bitcoin since 2020. They started with 250 million initially, and this investment occurred over 5 days. They later on went ahead in September and purchased further $175 million worth, totaling 425 million worth of Bitcoin. Hence, MicroStrategy became the first publicly traded company to acquire a large chunk of Bitcoin to hold its balance sheet as a primary treasury reserve asset. As you see, Coinbase has a large Bitcoin reserve. The red lines indicate the reserves. It was roughly at 930,000 Bitcoin. Mid-year 2020, they started selling off in preparation for MicroStrategy. Usually how it works is Coinbase usually uses 8,000 Bitcoin to make an initial custody wallet, and then they require also a minimum custody deposit of 10 million. So to answer the question where, it's through Coinbase using over-the-counter, meaning that outside of the centralized exchanges, outside where your average retailer purchases Bitcoin. This is why if you see such articles that Michael Saylor and MicroStrategy just purchased 615 million worth of Bitcoin, you go look at the market, you don't see any movement. And this is by design because they understand that the asset Bitcoin is illiquid. This approach obviously doesn't help Bitcoin's liquidity, neither does it help the retailers' investments, because all these purchases that are taking place are not taking place on a centralized exchange, meaning they are not adding any value to the price because there's no price movement going on for Bitcoin itself. Now that we answered the question where, let's see how does MicroStrategy buy so much Bitcoin. If we go here straight to the point, we can understand here that MicroStrategy uses debt financing. So to fund the investments, MicroStrategy took a substantial amount of debt in the midst of a low interest rate environment. The company issued convertible debt notes to raise funds for Bitcoin purchases. These notes allowed MicroStrategy to acquire these cryptocurrencies with borrowed money. To get even into more detail how this took place, let's look at an example here. So this was a direct hit at ETFs because ETFs are the news right now in the market. So how Saylor's company is better than Bitcoin ETFs and how he provides his stockholders value. They're making a case of why you're better off purchasing MicroStrategy's stock versus the ETFs from the asset managers. So MicroStrategy takes advantage of its position as an operating company. So to do something that ETFs can't do. So an ETF can't issue junk bonds like we saw, we just read. This is how MicroStrategy has been financing the purchases of Bitcoin. ETFs can't issue junk bonds, they can't issue convertible bonds, and the ETF can't do like ATM. ETFs can't buy Bitcoin with cash flow either. That's the case they're presenting. So they have much more flexibility as an operating company. And they don't charge fees. That's their case. So they have 4.5 billion, for example. So they have 4.5 billion of Bitcoin, but they don't charge 45 million a year. How did they come up with the number 45 million? Because ETFs management fees are usually around 1%. So 1% of $4.5 billion is 45 million. The real idea here is because what if they created an investment vehicle that paid the investors a yield instead of charging them a fee? And what if it was able to borrow money at 1.5% interest? So here's a theoretical example. If you get 2% yield instead of paying a 1% fee, it's 60% difference over the lifetime of your investment. Well, let's look at this much closer. So if you have $1 billion invested in MicroStrategy, you're getting a 2% yield. You are actually picking up 20 million every single year instead of paying the 1% or equivalent of $10 million a year. So the dynamic of the company is very important. So here they go further and make another example. So if you can imagine that if I don't charge fees, because I went and borrowed 2.2 billion at 1.5% interest, and I bought Bitcoin with it. Now, this is interesting. So what's the yield of Bitcoin? Okay, so, well, let's say that Bitcoin does 15% a year. Then there is a 14% positive yield of the debt. So that would be 300 million a year that accrues to the benefit of the common stock shareholders. So here, MicroStrategy is making his case why you're better off purchasing his stock than purchasing this ETF. So he's making his case that he's paying you as an investor, as a shareholder, 2% annually when he's taking a small interest rate loan of 2.2 billion. And if Bitcoin appreciates 15% a year, he's up 14% and he can still pay you your 2% and he's still up for the company. All this works perfectly well during the bull run. However, as we know, there's business cycles involved. So there's a boom and bust cycles. There's time for where liquidity is flooded into the market. There's a time where the liquidity is exiting the market. And we all know that crypto cycle goes 4 years. Usually 2.5 to 3 years that it's either sideways or down, and there's just 1 year that it's usually picking up. So in theory, this sounds great, but in reality, we all know that cryptocurrency has business cycles, just like the traditional financial market also has. And over leveraging your company with debt to purchase a very illiquid and extremely volatile asset is very dangerous. Just to remain unbiased and to just call things how they are. Another risk also is when short sellers try to short sell the stock price of MicroStrategy. That's another risk that they have to be aware of. But to be fair, MicroStrategy is a profitable software business. It's a proven cash flow generator. This enables the company to buy more Bitcoin, he said. Now keep in mind, they keep leveraging the company based on substantial amount of debt to keep purchasing Bitcoin. As long as Bitcoin price keeps going up, it's great. But of course, since the company is so heavily focused on Bitcoin, it's also at the mercy of the volatility of the asset. So as long as Bitcoin price goes up, everything works out perfectly according to the plan. But as we know, after the run up, always comes the run down. So right now we are on a run up. We're just starting. We're not even fully there yet. Everything will work out perfectly according to the strategy. However, what remains to be seen is what will happen or how everything will work out once Bitcoin really starts running down, as these cycles are very much known to be doing. So this was the video for today. The purpose of the video was to highlight milestone for Bitcoin adaptation based on MicroStrategy's pioneering move of having or holding Bitcoin as their primary treasury and reserve asset, and also to answer the question of where MicroStrategy has been purchasing the Bitcoin and how they've been going about purchasing it. So I hope this video was informational and educational to you, and I hope you feel inspired of the future of the blockchain technology. And this is what we have for you today. I wish everybody a wonderful rest of their day, and see you next time.